Good afternoon. I am Chris Swift. On behalf of my partner, Chris Wimward, and our sales assistant, Sean Gammon, welcome to this episode of Shooting the Bull. Last time we talked, we went through quite a bit of what the cattle cycle was kind of wrapping up at. This time we're going to start discussing a little bit, is this the new beginning of a new cycle? So we really don't know yet, but let's take and see what we did from last time we discussed this. We saw that the 13 through 16 time frame was a really big herd rebuilding. And then after we rebuilt the herd, we went into a prolonged 4 year long sideways lower market. Then again, now we push back up again. We're facing whether or not we need to move into expansion, whether we're still liquidating, which right now the numbers show that we have stopped liquidation. We haven't begun expansion, but there has been some questions out there with the lower cow kill. Is that because of fewer cows, or are we holding cows back, trying to breed them and sell our more expensive heifers? So we'll see. But the last time that we talked right here, we had just peaked at 261.88 on the feeder cattle index. We had dropped about $14 from that low. And today that we can see, we went all the way down to around 238 on that index and have come back up. Now we're creating a head and shoulders, and we are still very definitively within an Elliott wave pattern. And we'll see where it's kind of dissected just a little bit. Instead of one great big move where we thought we might go all the way down to 210, 215, it looks like it's subdivided just a little bit. So we have an initial wave down. We're going to call it the wave A. We now have what could be the right hand shoulder, the wave B, in anticipation of a wave C decline, still to around that 215 area where we saw a lot of the trading take place back in the 24 time frame. We gave some of the reasons for why the market went up, why we think the market may come down. And still at the top, we see where the green area is. Cattlemen still bullish, but fewer, and profits drying up. We have seen a lot of profit margins dry up. We know in October, the fat cattle rally has really helped the cattle feeder out quite a bit, but we still got a long way to go before we get into profitability from the old ways of calculating the on the hook. Now we're looking at further recognition of the agenda. 2024 has produced equal beef to 2023. 23 was about 6.5% less than 22 was. 24 being equal to 23 means we're just 6.5% less than what we were from an all-time historical production high. 2025 right now is slated for the same amount of beef production as what we did in 24. The interesting aspect will be whether or not we do move into expansion, or whether we continue either an A, liquidation, or we move laterally. We could honestly move laterally for 12 to 14 months and not change a great deal of aspects. So let's look and see where we are right now. We see the top again back in July of this year. Now we've had an initial move down, an initial move up, and in the purple line down here, this is what is expected from here. Further recognition of the agenda. And now we've got something else that has kind of trickled into the market, drought. Drought is not impacting feedstuffs or hay. What it's impacting is those little bit longer fall pastures that we could have, especially here in the Southeast, could have continued to use, and ponds. Ponds are drying up. The Southeast has already got very low water levels. You've all heard about the Mississippi River having low water levels. So it is an issue. And what we think is happening is, instead of where we generally slow down in our production in November and December, we actually might have to increase it just a little bit to move animals. We're not liquidating, we're not doing anything. We're just moving them 30 to 60 to 90 days ahead of where they normally would be, simply because of the drought. So I think that keeps a lot of cattle on feed. And in October, we traded just about the same amount volume in stockers and feeders as what we did last year. So I'll look for the October placements to be somewhere around 98, 99%. Still, the marketings will be an issue, but I don't think we're going to drop below 11 million head anytime this year for the rest of this year, and probably not going into at least the first quarter of next year, simply because of the placements that we continue to see. So let's look at the Elliott wave. This is what we're trying to figure out. We believe we have a 5-wave move to the top. We're looking for an ABC correction. Right now, I'm not sure that this A wave right here is complete yet. We could have an intermediate B wave that came in there that now subdivided this. This is the B wave where I think we are right now, still looking for the C wave decline. Again, this is what we were looking at the last time we visited, right around the end of July, 1st of August. Market had already started to break. We had the 5-wave count up. So now we're looking for some subdivisions in that. Here we see the initial move went down to the previous wave 4, which is a very normal Elliot type move. We had a 50% retracement, and now we're sitting here left with a very large question mark. Do we go back up and do we set a new high? Do we exceed the high and go up in the 270s, 280s? Or do we move back to what might be a more normal circumstance, back to around 215, 216? I really don't know. I think that it would take a tremendous amount of more money, of an increase in consumer demand fueled by higher jobs, greater wages, lower inflation all the way around of other products. The big question in my mind is, if we inflate again, which we're already kind of inflating now, and cattle only went up a little bit in this inflation aspect, a lot of other products went up, and the interest rates really shot up. So that's something that I may have missed in trying to book some really low interest rates, looking for even lower. Here they are right back higher again. So we're looking for a lateral move sideways. We're looking to see whether or not we can push the consumer up there to eat more beef, to the cattle feeder, to bid higher for your inventory, all in respect of, if we do have this drought and the drought intensifies, we're going to be moving more cattle into the feed yards, increasing our cattle on feed, not decreasing it. A lot of you will argue those will all be small cattle and smaller cattle. There's no doubt in my mind. But they're all cattle, and they're all going to be placed on feed, and at some point in time, they're all going to come out. The only difference it'll make is some time frame, maybe 1 to 2 months, where you get a marketing hole or marketing glut, one of the two. I think that's about the only difference that you're going to see. So I put up the intermediate degree again, so you can see that these things do subdivide. That's what we're looking at right now. We believe that there is a subdivision, that this A wave right here is now subdividing. And then we should get somewhere around the 215 area. And if you look at where that is, we were pretty close to saying that the correction should come in around mid-October. We hit that pretty good. Now we think that we move all the way into late December, early January, maybe even February, before we have a conclusion of what the drought is going to do. If it is going to be worse, then we may continue on down even further, because if we go back and look, I think we can see that from the 2013 through 14 time frame, 11 through 13 time frame, when the drought was the greatest, we had a big move down. It wasn't until after the drought subsided that we began to move up. So little bit of hope that this may only be a major correction, pull us back into the 190, 180 area there, and then we really do start back up. And maybe you do get the 280, 300, $400 feeder cattle prices, as so many people thought we were going to this year. Maybe that's a year from now. Until then, you got to deal with the drought. You got to deal with some issues of, we're going through another presidential election. I believe both are going to inflate the economy regardless. And the question then stands, do cattle and beef continue to inflate with everything else, or does the inflation begin to impact the consumer where they can no longer afford the beef? Higher prices is rationing, and it doesn't matter what it is we're rationing. The higher the price, the fewer people that can afford it. And we're starting to see some chinks in the armor now. We got back up to 190 in the fat cattle. Looks like about as high as we could go. We got back up to 250 in feeder cattle. Looks like about as high as we can go. We're starting to see some resistance, some pushback at those levels where not as many people can afford it. So again, we look and see that we've got the division coming up. We have an A wave down, a B wave up. We're still looking for another C wave down around 215. Maybe that gets us down and completes the segment. And then we see the spring of the year. We're in hopes that we can start to expand a little bit. A few more cattle will pull back. The heifers are held back, and maybe we do get another rally. If we do see that we're going to expand further or quicker, or we have some loss of beef demand out there, then I think we could go right back down to the 180 level without any trouble whatsoever. And that may be a year from now, but we're already getting a pretty good head start on it right now. So in the change of the cycle, is this the beginning of a new cycle? No, probably not. Is it the completion of the liquidation cycle? Yes, it probably is. The next most probable move is lateral. We stay just like we are for the next 6 to 8 months until we get the drought issue at least out of the way, or it intensifies, one of the two, or we begin to see some kind of either larger increase in demand from our consumer, our economy has now improved greatly, or we begin to see something on the other aspect of it where we're seeing a lot lower economy. People aren't in as good a shape, and beef then becomes a little bit too expensive out there. If you have any questions, if you ever want to contact us, never hesitate to pick up the phone and give us a ring. Myself or Chris Wimmer are always happy to talk with you about just about anything, but we sure like to talk about cattle. So feel free to give us a ring anytime. I look forward to the next time. I'm Chris Swift. Have a good afternoon.